Welcome back to the show, Inside GST. Today we are decoding GST 2.0, the biggest council shakeup since 2017. And we are discussing major rate cuts and compliance update and more. But who better to explain all of this to us than Dhiraj Kanted, a chartered accountant and GST expert. Welcome to the show.
Yeah, thank you. Thank you for having me on it. Yeah, so GST 2.0 is a very landmark judgment. So if you see since 2017, GST department has been doing tweak and tucks, but this is like a structural reset. So the rate cuts are just not the numbers on the papers. It's going to boost the economy in like ever before, and it's going to make it for simpler GST compliances, and it's going to give a breathing space for a lot of sectors which were feeling the pinch. So overall, it is a very good move, I could say it, and especially with the simple GST compliances and the rate cuts is going to benefit a lot of industries overall. So overall, it's a very structural and good move. It is going to re-establish the system and bring confidence back in the economy. So yeah, it's a good move.
Good to have your thoughts on this. So let's start with the headline move. Since 2017, we've had four major slabs, the 5%, 12%, 18%, and the 28%, which has caused a lot of confusion. For example, loose popcorn was taxed at 5%, packaged was at 12%, and caramel was at 18%. Now, what are the revised slabs looking like?
Yeah. So we were having four slabs before, like 0%, 5%, 12%, and 18% and 28%, which looks good on paper, but on reality it ended up in a lot of confusions, HSN misclassifications, and overall lot of issues while filing your GST monthly return. So now the government has revised the GST rates at majorly at two rates. Okay, so one is the 5% where the essentials are made sure that they have been charged at 5%, and the second slab they have brought it to 18%. So the majority of 12% slab is moving to 5% slab, and the 28% slab bracket have come to 18% slab bracket, where majority of your goods and services fits in, and that 40% luxury and sin goods, so that has been classed at a 40%. Now this is going to give a lot of stability to the businesses because they know where they stand in. Most of the essential products are fixed at 5%, and the normal GST rate is like an 18%, and for luxury and sin items it is very obvious to have it at 40%. So that's brought a lot of simplification in the tax rates comparing to the 5 to 6 tax rates which we had before.
So, why this GST reset in 2025?
Yeah, see, somewhere we have to boost the local demand, and because of the tariffs and other things around, so it is being very much difficult for the economy to perform as well. So this rate cuts will bring local demand boosting. So if you see back in January, so they have announced a lot of rate cuts on income tax as well, which will leave a lot of money in the hands of the middle class people. And with the festival season coming in, since there's a lot of slashes on majority of the consumer products, so that is going to boost the economy like ever before. It's going to like reach in very good numbers, and you have the big billion days coming as well. So it's going to be a big billion sale for the e-commerce and the MSME sector as well.
That's great to hear. And before we go sector by sector, I think it's important to discuss how this could affect the economy at large, which you have told a little hint about, but can you elaborate it a bit?
Yeah, so if you see how it will impact the economy, I'll just split it up into three segments: the businesses, the consumers, and the GST department. For consumers, it is going to be a big Diwali and a big festival season. A lot of your affordable products and your essential products have been taxed at 5% overall, and your consumer electronics rates have also come down, which is a very good move. A lot of things are going to be much affordable than ever before. For business, more than the rate cuts, it's like a responsibility. You have to revise your MRP, you have to restructure your accounts, and you have to restructure your classifications in your accounting systems. And overall, it's going to be a tough time for the businesses because the old stocks will be at a higher GST rate and they have to bring it to the new GST rate. So it's going to be a heavy task for them. And for GST department, because of the anti-profiting, they're going to be on a very high check to see the end consumer, the end benefit is passed to the consumer or not. Because from the GST department side, it was very clear that this rate cut should reflect in the end consumer's point of view. The pricing of the product should effectively come down. So that's how all the three phases are going to be looking like.
In our previous episode, you mentioned that this is going to be a Diwali gift for many of the consumers. So now let's look at it sector by sector. So I will call out a sector and you can tell me how it's impacting each sector. Consumer electronics.
There's a big relief for the consumer electronics because a lot of your products which is charged at 28% are going to come at 18%. So your air conditioners, not just cooler, now lighter on pocket as well. Dishwashers have become much more affordable, and your television, TV sets, and all the other components of it all got reduced from 28% to 18%. So your binge watch got 10% cheaper. Overall, it's a very good move, and it's a festive season coming as well. So it's going to be a very big boom, and a lot of people are going to buy it, and they're going to like straight away save close to about 10% on what they spend.
That's a big gift for the middle class family in general, I think. But next sector I want to talk about is one of my favorite sector, and I know this is going to have a big impact. What about automobiles?
So in the automobile sector, the GST 2.0 brings a relief and also a restraint. On one hand, the passenger motor vehicles and your hatchback cars and your small compact SUVs, all those cars, the GST rate is going to come down from 28% to 18%. And even on three-wheelers and two-wheelers, the GST rate is kept at 18%, which is a good move. But for the luxury cars, which are like more than 4,000 millimeter in length, and your yachts, your private jets, all these are going to be charged from 28% GST to 40% GST. So if you see overall, the affordable transportation have come down, but luxury and SUV cars and luxury cars and all the other automobiles, the rates have gone up.
Okay. What is your take on luxury cars being impacted by GST specifically? Because a lot of citizens, they go abroad, like in places like in Dubai, to buy their cars, especially because there's no taxes there. So what is your take on this revision right now?
I think this is more like a socialist mindset which we are having it. See, luxury is, everybody has their own definition. For people who's not having a two-wheeler becomes a luxury. For people who are not having car, then a car becomes a luxury. So I find that we should promote more quality and high-end cars. So people who want to buy everything should be affordable. It should not be like the luxury becomes even more expensive and people don't buy. And people, since they don't buy, they don't manufacture such goods in India. And all these are mostly imported cars. So I feel all the automobile sector should be treated in the same way, not like luxury and affordable cars. So that if the pricing is good, then even your Olas and Ubers, if you see in Australia or in Dubai, everything are very luxury cars. But in India, it's not the possible because it is very damn expensive, and 40% of the GST means more than the margins of the automobile sector. GST department is having more margins on that. So I feel it's a bit of unfair, but that's the law of the land.
Yeah, got it. Next is an essential for many humans, which is food. How is this impacting the food sector?
Yeah, food sector government has thought a very strategic way. Before it was very much a haywire. So you could find that lot of pricing at 0%, 5%, 12% and even 18%. Now government has decided for a revision of taxes to bring it maximum at 0% or 5%. So your paneer, your ghee, your butter, all those essential items have been brought down for 5%, which is very good. And especially like cakes, bakeries and pastries always taxed at 18%. So it was a very disastrous way it was being charged, which is very good now. It has been taxed at 5%. So overall, predominant of the food items, they have brought from 12 and 18% to 5%, which I feel it is a very good move from the department side.
I think this GST revision in general is helping the middle class, and it's a big win for them. Now the next sector is a very debatable sector, which is the tobacco sector.
So in tobacco sector, GST 2.0 has gone on a split decision. On one hand, the BD leaves and the wrapping leaves all have been reduced from 18% to 5%, and the BDs as well has been reduced from 28% to 18%. But your other smoking products like hookah, cigarettes, and all those things have been bought from 28% to 40%, which is a sin item, which I do understand all the items are predominantly a sin item. But yeah, the local BD manufacturers are getting a boost, but the modern and other nicotine substance which is being used, everything has been charged from 28% to 40 percentage.
Okay, got it. I think that's a confusing rate structure, I would say, why BDs are taxed low and cigarettes are taxed higher, essentially, because is it to promote local BDs in a way?
See, technically, to my best of my understanding, if you're smoking a BD, it is much more harmful than you smoking the other tobacco alternative products. But yeah, it is just a general boost for the local manufacturers and a little bit for the upcoming elections as well. And I think everything should have been taxed at 40 percentage because everything was not healthy in a
benefit,
way.
yeah.
So that should be taxed. Yeah. So if you see the food sector also, like the non-alcoholic beverages and highly sugar-contained beverages, all have been taxed from 28% to 40 percentage. So government predominantly sees whichever is unhealthy products, they want to charge the maximum GST rate so that it becomes expensive and people don't buy it. But it's going to be the vice versa, I would say it. But anyways, yeah.
I
that's
think
it.
Indian government is trying to promote a healthy lifestyle for its citizens, which I see. Now, the next sector I want to talk to you about is the energy sector.
So in the energy sector also, if you see, the department has taken a two-stand approach, like windmills, solar panels, solar heaters, and all the renewable energy products have been charged from 18% to 5%. On the other hand, the coal and the lignite, which was predominantly charged at 5% from 2017 till date, has been revised to 18 percentage, which also makes sense because a lot of the other similar products have been charged at 18% so far. Coal was kept at 5 percentage. Now they have increased it. That might lead to higher electricity charges as well. But yeah, so if you are going for a cleaner energy sector to promote cleaner energy and renewable energy source, government has kept at 5 percentage from the existing 18 percentage. But on the other end, the pollutant products have been increased the GST rate from 5% to 18 percentage. So which I feel it is very good and very much required as well.
Got it. Now, one of the sectors that we hear a lot in GST, involved with GST, is construction. How is this GST revision going to impact construction sector?
Yeah, so if you see, the number one product which has been used in construction is the cement, which for a large time it was charged at 28%, and the builders were not allowed to claim even ITC on it. So that has been revised from 28% to 18%, which is very good. And even limestones have been revised, the GST rates has been revised. So overall, that's going to boost the construction industry, and it's going to be like 10% savings on a huge amount of inputs which is being used. So it's going to make your houses more affordable, and it's going to boost the economy as well.
Got it. The revision for the next sector is something I believe that every citizen in India should be aware about: healthcare.
Yeah, so healthcare, the government has taken very important and very good moves, I could say. So if you see the all the equipments used in the hospitals and the oxygen and the testing kits and everything, which was at 18 percentage before, have been brought to 5 percentage, which is a very good move, I could say. And a lot of your medicines, including Ayurvedic medicines and the normal medicines as well, which has been bought predominantly at 5 percentage or at 0 rate percentage, which is a very good move. And one of the biggest news of 2025 is that the GST rate on life insurance and medical insurance have been scrapped away with. So from existing 18 percentage, they are brought to 0 percentage with no ITC claims, which I think it is very much essential because every individual should have an insurance policy, and that will save his life hard money, and it will give him a more sustainable life when he's being living around. So I think it is a very good move. And if you see, for the common man, lot of thought process has been gone right from the income tax rate revision to the rate revision for the common man on affordable products and other products, which I think the government is thinking for the common man. They are thinking for the middle class, because for a lot of time the rich guys anyways could earn a lot of money and they could pay a decent amount of tax. The poor are never been charged at tax because they don't have the money to pay the tax. The middle class was taking the burden of the economy by paying a huge amount of income tax and a huge amount of taxes in form of indirect tax as well, which I think now it has been rationalized and which has been thought about, which I think it is very good move from the government side.
I think that's a great move and it's a relief for the middle class, especially considering the fact that healthcare should be affordable and it's for everyone. It should be equally distributed. The next sector I want to talk about this GST revision being impacted is the textiles.
Yeah, so if you see the textile sector, the one of the major changes which has happened is that if your apparel and your clothing is being charged at more than 2,500 per piece, then from the existing 12% it is moving to 18 percentage. Even on footwear, if your footwear is more than 2,500, then your tax rate is from 12% to 18 percentage. So luxury clothing, the GST rate have been charged more, but on the other end, the affordable clothing have been taxed at 5 percentage. The carpets, wall hangings, and other textile garments have been predominantly charged at 5 percentage, which is good, I would feel, but I think it should be common for all, as I said before.
Yeah. The next sector I want to talk about GST impacting is the services.
So in services, GST 2.0 has gone on a sharp contrast. On one end, the movie tickets which are priced less than 100, the GST rate has been slashed. But on the other end, if you see the sporting events like the IPL, concerts and other things, they have been charged from 18 or 28% to all the way to 40 percentage. And even like gambling, horse betting, and all the actionable claims. So such kind of transactions have also been moved from 28 percentage or 18 percentage to 40 percentage. So I think service sector has gone on a very big hit because of the online gaming and all these things now undergoing a revision part. So majority of those who have been now be getting charged at 40 percentage, which it is very much contrasting in nature.
In your opinion, is this to control online gambling and sites such as this?
Yeah, see, everybody has a different take. I feel that everything should be regularized. If you block a specific contest and things like that, so there'll be a parallel economy running for it. Example, if you're going to charge the non-recognized sporting events and concert at 40 percentage, then what's going to happen is like there will be running a parallel economy, because 40% margins, even the person who is hosting the services or producing the such events will not be able to get a margin out of it. So paying 40% GST becomes much more difficult. So there'll be more of a tax evasion and parallel economy towards it. I think we have to rationalize the tax to have one tax structure for all the goods and services to avoid any kind of ambiguity, and to tax the larger bracket structure instead of concentrating to very few luxury and non important sectors.
Got it. So rather than people trying to completely stop it or regulate it, they will try to evade it. But
Yes,
yeah,
yes,
got
yes.
it. Next sector I want to talk to you is something that is very important for families in India, which is education and household goods.
Yeah, so one more fantastic move I could say from the government. So for the education sector, your notebooks, your pencils, and your geometry box, and all those things you use for stationery have been taxed at zero rate, which is very good because you should not be charging tax on education, which is going to make the cost so high. On household items, also crockery items, stainless steel items, have everybody getting taxed from 12 percentage to 5 percentage. But for businesses, they should be filing for GST refunds, because already their raw materials are at 18 percentage and they were charging 12 percentage. Now at 5 percentage will make them to file for GST refunds. But as I say, for the common man, whatever products they have consumed, everywhere the rate cut has been happened. The only challenge is, will this benefit flow on to the end consumer? So
Got it.
that's the major challenge, and let's see what happens on that.
Yeah, I think just like healthcare, education also should be affordable. So again, it's a big win. Next industry is something that we don't talk about often or hear about often, which is the leather and handicraft sector.
So for leather and handicraft sector, they have also been reduced from 12 or 18 percentage to 5 percentage. Almost all of the leather products have been reduced to 5% GST, which is very good. And if you see the handicrafts also, to promote the local business, they have been reduced to 5 percentage. And all the personal dutiable goods which you bring it for by import or by thing have been reduced from 28% to 18 percentage, which I feel which is very much good in nature.
Great. I think in general, Indian government is trying to regulate a lot of, trying to promote a lot of its products, is what I'm seeing through this GST revision. Exactly where the next sector comes in, where a huge population of Indian citizens practice in this industry, which is agriculture.
Yeah, so in agriculture, GST 2.0 has shown a lot of support. So if you see lot of agriculture equipment you use, the tractors, the hand-grown pumps, the hand machines which you use, all of this item have been taxed from 18 percentage to 5 percentage, and also the fertilizers you use, ammonia, sulfuric acid, and all the other chemicals also which has been used for agriculture have been bought from 18 or 12 percentage to 5 percentage, which I feel very much good. And let's not forget the tires of the tractors, the tubes used in the tractors. For all these products, the GST rates have brought down from 18% to 5%, which is the agriculture, which is the rural backbone of the Indian economy. So we should care about the farmers, and government has always been taking the first priority to make farmers' business much more affordable and much more beneficial. So I think it's a very big move, and it will impact a huge population sector in this field.
I think this GST revision in general is helping a lot of consumers from families to farmers. So this is a big impact for all the sectors. Now, my next question for you is that on compliance, the council has made some tweaks. Can you elaborate on this?
The first thing the council has taken a move is to scrap section 13(8)(b) of the IGST Act, that is on intermediary services, where the location of the supply is the supplier's location. So that now has been scrapped out. So now the rule will flip out, and the location of the service will be the location of the recipient.
Okay.
So it will benefit the IT and the consulting industry overall, where a lot of issues and a lot of misclassifications have been reported in the past.
Okay, good to know. Good to know about these major tweaks that has been happening. Is there any compliance tweak in pre-sale discount and post-sale discount?
Yes, so that also been a major shift. So previously, the postal discount was led to linked to the agreements and the invoices. Now the government has done away with the postal discount. So for both pre-sale discount and post-sale discounts, you are allowed to reduce your tax output liability, but it should not be like financial or commercial discounts which you are giving. Apart from that, both could be adjusted before you pay out your output tax liability.
Got it. Now, something newer businesses would want to know is there any way to fast track GST registration?
Yeah, the government has come up with a new scheme called as the to give GST registration within 3 days. So you'll be having an option to choose for small taxpayers. If your gross tax liability does not exceed 12.5 lakhs a month, then you have the option to choose for a faster registration process, where the system itself will evaluate your KYC documents and provide you an automatic registration within 3 days. So if you're choosing the option, you'll get the registration within 3 days. And for candidates who are exceeding the limit, then the manual officer check compliance will apply. So I think it will fast track for a lot of small businesses. The GST registration will be fast tracked, which I think is a good move.
Is this something that your company offers, GST manager?
Yeah, we do offer GST registration services. So we have two packages, the light and the premium one. So in premium one, we file the application within 24 hours, and in the normal, we file the application in 3 business days. So overall, we are in for end-to-end support for GST related services, right from registrations to monthly filing. So we just want the businesses to focus to grow their business and do the business. Rest of the accounting and financial compliances we take care of.
So you heard that in case you are looking to get your business registered, you know who to contact. Now, before we wrap up, let's do a quick FAQ section. How about that?
Sure.
All right. My first question is, when do the new GST rates start?
Yeah, so for the rate cuts, the most of the rate changes start applicable on 22nd September. That is the start of the Navaratri.
Hmm.
And for other like tobaccos and other things, it might come on the first week of November and things like that.
Now, my next question is any change in registration threshold under the new GST?
No, it remains the same.
All right. If supply is before the rate change but invoice comes after, what rate applies?
Yeah. So if your supply is before 22nd September and you have got an invoice and you have made the payment, then the rate on before 22nd September will apply. And post 22nd September, the question is, can you claim ITC on such products, or will there be a reduction in the ITC claims? No.
Hmm.
So whatever the billing is done, for the same rate, you will be eligible to claim the ITC. From 22nd September, the new rate will apply.
If supply is before the rate change but invoice comes after, what rate applies?
Yeah. So it is very simple. So if you have received an invoice before the 22nd September and if the goods have been received, then the old rates will be applicable. And whether the ITC will be reduced after 22nd September, the answer is no. So you'll have the same whatever invoiced, whatever GST rate you have been invoiced in, the same rate will be applicable. And from 22nd September, the new rates will be applicable. So whatever invoices have been done in the previous GST rates, the entire ITC you can claim, and from after 22nd September the new GST rate should be applicable.
Now, what happens to ITC on purchases before rate change?
It remains unchanged. You can claim the entire ITC. Yes.
Okay. My supply becomes exempt from 22nd September, but I have ITC in my ledger. Is it reversible?
Yeah. So if your supply becomes exempt, then whatever ITC you have on your credit ledger and whatever stocks you have, on that you will have to reverse your 100% ITC.
Got it. Refund of accumulated ITC due to inverted duty if rate changes.
Yeah, so if there's an inverted duty structure example, there should be a product change. Same product, if it is a reduction in rate change, you cannot apply for inverted duty structure refund. Example, your raw material has been charged at 18% and your finished goods have been charged at 5% or 12%. Only in that case you can apply for a inverted duty structure refund.
Got it. Stock in hand when rate changes, old or new rate?
For the stock in hand, the new rates will apply post 22nd September.
Got it. So to wrap up, GST 2.0 is bringing simpler slabs and easier compliance. And I think it's even more becoming hectic for businesses. I think that's exactly where a compliance partner like GST manager comes in. How should businesses get ready for this change, this GST 2.0?
Yeah, so it's a very structured mechanism. First, you have to list down all your products and services and your HSN codes and see what are the current rates and what are the existing rates. I suggest to hire a professional to make it once for all the proper classification so that you don't get GST notice in future. So list down all your products and services, get the new HSN classification and the GST rate classification done, then upload your accounting systems in that way. And for the existing stock and the new stock which is coming in, make sure that the proper GST rate is being charged so that you're going to be under the watchdog for anti-profiting other things, and you'll have to reduce your MRPs for whatever products you have been charging at a higher GST rate. So I think these are the changes, and you have to also check that your business is eligible for GST refunds or not. And you have to make sure that when you do your GST monthly filing for the month of September, which falls on October, the proper HSN code classification, the rate change has been mentioned very clearly so that you will not have any trouble of GST notices. And I think it should be one time structural change for all the businesses, and I think in a couple of months time they should be habituated for the new rate change and new things like that.
But I also think that is exactly where a compliance partner like GST manager comes in. From solving their monthly filing issues to litigation, they take care of everything, correct?
Yes.
Can you tell us a little bit about the services you provide, especially for businesses in these cases?
Yes, for your GST 2.0 you can simply take the GST expert opinion services, so we'll guide you end to end. So majority after that we provide GST monthly filing and annual filing services. So GST annual filing services, the due date is 31st December 2025, And the most important, the last date to claim your input tax credit is 30th November 2025. So that is your October's month GST monthly filing return. So it's important to file your GST annual returns on your time. And we also take care of GST litigations right from assessment level till the High Court and the Supreme Court level. So yeah, we all in all we provide all kinds of financial and GST related services.
Thank you. Thank you so much, Dhiraj, for joining us in today's episode. Great to have you as always. And to our viewers, in case you like the episodes that we put out, make sure to like, subscribe, and share this content. And also comment down below what you want to see in our further episodes. Thank you. Bye.